Go live. It's 12 o'clock. Welcome to Taking Stock. It is Tuesday, the 9th of January, 2024. And John's here. You're right, John.
Not too bad, how you doing?
Not too bad. I had another John on yesterday, John Mayer from
Oh, did
he
you?
was
No, nice.
live from Argentina.
Hey.
It's nice weather there. The weather there, it's freezing, isn't it?
It's a lovely day. It's pretty cold, but the sun is shining. It's quite nice. Quite like a
Yeah, I always prefer
bright
that
winter's day.
yeah, prefer that to rain. But having said that, storm clouds are appearing, John. I don't know if you saw this. The BRC came out with retail figures, and they're saying that Christmas below expectations, up 1.7. It expected to be about 2.6. I think that was the. So I've been saying for a while, Q1 I think is going to be very difficult for the markets because people are sort of tightening their belts. Turns out I thought they'd be tightening their belts in Q1. They've been tightening their belts during Christmas as well. Spending's down on many big ticket items, and people are going for sort of health products and all that stuff, or beauty products that are cheaper than big ticket items. So we are seeing a bit of a rollover, and I think the thing that's going to help the markets, the central banks. It's not the economy, and the reason why central banks will step in is because the economy is suffering, and it seems like it's going that way, isn't it?
It is, but I think we saw some sort of slightly stickier inflation figures from Europe. So that the prospect of rate cuts is not a dead cert by any means. Christmas, I think there were some winners and losers.
Yeah.
But I think the general theme was one of frugalness. Certainly that was the case in my family. There wasn't the usual present splurge. Certainly amongst the adults, and there was I gave my kids cash. Have the cash. Don't waste it. Spend it when you need to.
Yeah.
And a lot of presents that came from charity shops, which was nice.
Really?
I like, nice little books. Everyone gave each other books, cheap presents.
Yeah. But so I do think we are going to be it's going to be a tough, I think, quarter here. Let's look at the markets quickly. FTSE 100, well, it's hardly moved, down 0.01%. FTSE AIM all share is down 0.12%. Let's look, defensive is up. Well, the rises here. It's not a lot of big rises here, but BAE Systems, BP, Centrica, all that. What are the fallers here? Let's look at the fallers. Oh, JD Fashion again.
Yeah.
I said it never rains, it pours. When you release bad news, you tend to have bad news coming afterwards. So you should never jump in on a falling knife because you're thinking, okay, are there sales going to pick up in this quarter or in this half?
Maybe
not. So.
Maybe not in this quarter. As you said, those retail figures over Christmas were pretty poor. Marks and Spencer's, they had a reasonably good Christmas, but I think the general sentiment around the retail sector, the consumer sector, is nervousness, particularly those selling stuff. Shoe Zone had some numbers out this morning. They were okay. But people aren't buying each other shoes for Christmas. Slightly different proposition.
Yeah, you don't get that, do you? I've never had a pair of shoes for Christmas.
Trainers,
yeah.
You buy your kids trainers or whatever.
But that says something, doesn't it? That says something. Shoes are more functional. So maybe they are more resilient.
Non-discretionary, you would call it. They're not particularly shoes in this case. You'd hardly describe as a fashion item, but you can't go out of the house without a pair of shoes on. So they're in a pretty good position.
Yeah, they're not the kind of thing where you'd get from a charity shop either. Do you know what? That'd be good. I bought you a pair of shoes for Christmas from a charity shop.
People do buy shoes from charity shop. You've got to be very lucky to go in and find a pair you like that are in your size. People chuck away some really good shoes. It's amazing.
Yeah, trouble is they're like dead man shoes, aren't they? That's the trouble. We've looked at the chart before on shoes, and I said, it's rallied very strongly and it needs to consolidate. It has. It's just gone sideways. Even on this on the news today, they're following the results. I've done a spreadsheet on this actually. I should bring it up. But
I think sideways. A retailer moving sideways. I mean, in Shoe Zone's case, it had a very strong run. It didn't come off. In the same way that other companies within the sector saw their share prices really get hit in 2022. So at the moment it's sort of treading water while others are playing catch up. B&M being an obvious example, they got hit quite hard and they're bouncing back strongly. Next, we saw their share price has bounced back very strongly this year, and Marks and Spencer.
Yeah, well, look at that. I mean, the time to get in there was when, like I said, the gloom was there. And it's the same with everything. House builders, people get caught up in the gloom. I think what people understand is that's the stock market's discount. That's their sale. when a sector is super gloomy and it seemingly no optimistic outlook, that's the time to start looking at some stock. I mean, look at that, 580% from 2020 they've done Shoe Zone, and now people are jumping in thinking to get a similar rise. It's not going to happen. The rise has happened. The rise was there when people were sort of downbeat on it. Everyone was downbeat on it. That was the time to get in.
Yeah, absolutely. It's unlikely you're going to get a similar rise. I mean, the shares they don't exactly look cheap now. On a forecast PE basis, they're pretty cheap, 9 times forecast earnings. But that's fairly consistent with the rest of the sector. The yield, the dividend yield, is what you'd be interested in on a company like this now, and it's 1.5%. So, way lower than what you can get in a bank at the moment. And if you look at the final results, there was cash outflow this year.
Yeah. Well, there was for the half year as well. I should bring up my spreadsheet, but let me just have a quick look at. So what? Yeah, I was looking at the forecast and put it in the spreadsheet. I didn't see any upside a lot at all.
No,
really.
I would agree.
It's held its own. But I mean, like I said, if you could pay a dividend, but yeah. So revenue 165 against 156. Yeah. In fact, let me just get this up there. I have to find out. Bear with me a second. Also, Hayes came out with some news that's dropped. And I mean, the thing is, things like Hayes, who are recruiters, they are still yet to take the brunt, I think, of the downturn. Because if we have a slowing economy, of course, it's just obvious, isn't it? People are buying less. There's less demand for products. People can be, less. Why would if you're manufacturing anything or doing anything and you're selling less, you're not going to take on more people. Simple as that.
No.
So recruiters are still going to take a hit.
Well, yeah, and this has been my my point for a while. That I think there are certain areas of the market where the effects of an economic slowdown have not been fully priced in. I would suggest that the recruiters, the whole sector, sold off on the back of this update today. Their net fees are down quite a lot, so they're down 10% on a like-for-like basis. Worse in the UK. Actually, Australia, New Zealand is worse, but the UK is pretty bad, down 17%. And permanent recruitment is down. Has been hit harder than temporary, which you would expect. As employers become a little bit more circumspect given the economic backdrop. So yeah, the shares are down about. What did they fall today?
Well, look at that. They went down. They have gapped down, but they literally went down to sort of 87 pence and rallied a bit. But look at that. This is the kind of stock you need to look at when the economy starts, or when the central banks maybe start to ease. And then hopefully looking forward then, when you're, it's written, like I said, pretty much now it's in the write-off condition. And people think it's going to be a bad, 6-12 months ahead. But they'll start to rally before the market improves. But you need to see central banks change their mind. And it's the same kind of thing with Shoe Zone. When it's written off pretty much, that's when to look at them. It really is.
I just don't think it's. I mean, I did say the other day, that I did think that the Fed would be looking to potentially cut in the first half, but so the UK and Europe still looks iffy. Inflation has not entirely gone away, but some of the underlying economic numbers seem quite strong still. So yeah, I think there's worse to come economically.
Yeah.
This side of the Atlantic,
you got to make sure where you are in. So this is Shoe Zone's spreadsheet I've done today, and we are enterprise value 89 million, so got a decent amount of cash. We are, but see the growth is kind of slowed there, but the value seems quite decent. It's a EV/EBITDA 4.
They're not expensive on a headline level, but as I say, when if you expect that share to tread water, which you could argue that it will, then you want it to be paying something. You want it returning something. Dividends would provide that, but they're not paying enough of a dividend to make it worthwhile at the moment.
Yeah, well, I mean, if you look at I look at the forecast and broker forecast as well, and put that in the similar multiples, you're looking at hardly any upside in the next few years.
Yeah, so nice company, Morgan. It's better place to be money at the moment.
Yeah, well, the run has happened there. It was an amazing return from 580%. It's happened. If you're in it now, too late. If you're getting it now, too late. Take your shoes off. Let's look at the front page of Vox here. What's happening here? By the way, by all means, hit that like button, subscribe, and join in the chat. What we got so far? Let's have a look. Celebrus, this is Riffitsoff. Celebrus Technologies announced 4 software contract deals. Just sharing some good news. What is is that on the UK market?
It is. I don't know it. I have to admit, it's quite
changed their mind.
Blimey, 100 million. I don't I am going to put my hands up and say,
oh, they've changed their name, have they? It's called Data. There's something because hang on, that's sometimes what happens, isn't it? Celebrus contract update.
No,
I don't. Yeah, I think
it's got me. I'll have to have a look. Come back to this one.
Yes,
Quite big though. It should be on the radar, and it isn't. I don't know why.
I'm not aware of that riffs off, but let's have a quick thing there. Take a look at FUM. They've appointed non-executive director who has history of previous
Futura.
takeovers.
Yeah. Futura. The shares are up quite nicely today, up 11%. And it's always as the viewer points out, when you bring someone in with expertise in a particular thing, in this case, sort of overseeing some companies that were taken out previously, then it is an encouraging sign. I noticed the other day that Hvivo changed their broker as well. Again, the shares are up on that. It's like, okay, why have they changed?
Is that because there was rumours of them listing elsewhere? I mean, across the seas as well.
It seems to me a sign of ambition.
And
I
Cahill obviously has done it before. He's with what's the other company he had? I can't think now, but he listed that in the Nasdaq as well.
Yeah. But it just is part of the journey, part of the sort of, as I say, the ambitions of the company, and same with Futura here. This is it's an ambitious appointment. It points to ambition.
Yeah. Informer. I have a position in Trufin. I can clearly see it's in a downtrend. If I hold, it will continue down. If I sell and wait for an uptrend, I can see me missing the turn. So I can't do dirty. Should I just give up? Listen, I've held Trufin for several years, and they are forecast now to be profitable. And it's taken many years to get there. They've taken 4 companies, operating companies they've held, all of them been sort of loss making. Now they've sold one, but that was profitable. I think they are predictably profitable on PlayStack. So Targo is the thing to look out for. I mean, done deals with Lloyds and things, and that's going to be profitable. And so they are forecast to be profitable. So I wouldn't give up now. If you've held it for it's been a loss-making company for many years, raising money, and now it doesn't need to do that, the pain's happened in my mind. It's going to do well going forward. That's why I'm holding. I don't have a huge position, but I do like Stargo a lot. So anyway, okay, Futura. Some of the front page of Vox, Intelligent Ultrasound, Johnny Boy. You've been covering that.
Yeah,
took a bit of a beating today. The share price. I mean, I hold these again. I do like them a lot. But the reason why it went down, I believe, what are we down today? It's now down 8 or 9%.
It's come back a little bit. Down 10%. It's pretty much where it's been all day. I guess there's two aspects to this. One is the sort of the core, the simulation division, which is so it calls itself Classrooms Clinic. So it provides these sort of training tools, classroom, and then it also does clinical solutions, which are the ones that tend to be more AI based. And the classroom side of things is a bit weak. On the basis of sort of lower than expected sales in Europe and China, but it didn't. There wasn't a repeat of a very large NHS order that landed last year. So that's probably what's sort of spooked the market a little bit here. The encouraging bit is that the AI side of the business is flying. So tripled its AI revenues. It's now standard feature on GE Healthcare's couple of GE Healthcare's Gleeson machines. These are the sort of industry-leading machines for sort of prenatal scans. And there's a lot going on in the background as well. So it's moving into sort of fetal scanning. It's moving into it's got a liver scan, as you can see there at the bottom of the screen, liver image scanning with Dundee University, which potentially takes it into a new area. Lots of new products coming along. Didn't spend a lot of money this year, so cash is pretty good at the moment.
Do you know what? I'm going to be biased in this, so forgive me for the ramp. But I genuinely really like this company. I mean, the share price is down on historical figures. I mean, to be honest, it's just the end of the year. If you look at the growth here, it's phenomenal. You've gone from 300,000 in AI to 700,000 to 2 million. They're going to double that again, they say, this year. They have got cash to get the profitability. Their tech is in the biggest manufacturing machines in the world, GE. It's the best in class. I can only see it getting bigger and growing.
50% of the market, GE Healthcare.
50% of the market. It's growing, and they're going to be profitable on the current cash. What it's not like here, it's like literally, okay, the legacy side of the business is steady. They did say, if it wasn't for that big NHS contract last year, you say that's an excuse, but if it wasn't that last contract, then they would have been 38% up. But they're guiding towards 14 to 17 million for 2024. Even if they do 14 million, they'll be profitable, and that'll be 26% top line growth.
It's
And
quite
like I say, the AI is growing very quickly. It's best in class. Do your own research. I mean, it's not. I mean, 2 times sales. Okay, you could say well standard really should be 3 times, but it's not particularly dirt cheap. But it's the best in class software. You're not going to get dirt cheap. So I just think it's having a patience, and it's very liquid. So you come out today, you see the top line going down a little bit from last year, and a couple of people sell, and it takes a knock. But I think this is one of these companies. It's a business I really like, and I'm going to hold it because I do like it. I mean, it's like it's a bit volatile, but I think it'll improve and it'll grow into value. I think it'll be cheap this time next year. If it stays around this level, it's going to be cheap. So
it's great technology, and it's a great business plan, great business model. Really like the management team, Stuart Gall, chief exec, spoken to him quite a few times. He's he's really on the top of his game here. I think it's a really nice company, and it's got the potential to really grow. I mean, the trick with AI, I mean, in the healthcare industry, AI is going to transform the healthcare industry without a shadow of a doubt. But the sort of the journey is that, training to become a clinician, a doctor, it takes many years, and actually there is a sort of barrier, amongst doctors who think, well, why is AI able to do things better than me? And I think the trick is going to be actually the realization that AI is not there to replace highly skilled clinicians, but it's there to make their job easier and make it quicker, make the whole healthcare delivery process quicker, and that's happening
with obstetrics. When you're looking at pregnant women, there's like 21 markers you have to mark out, to check measurements from the cranium, all that stuff, size of the baby. And, that would be done sort of manually post, the scans previously. Now it's done live. AI can mark up those things straight away quickly and get all the ratios for the health of the baby so quickly. If you look at this, I just think they're going to be doing 4 million, they say, pretty much in AI next year. How many other companies, sub 30 million market cap, are in 4 million and growing at this rate from AI? Even big companies who are touting AI are not earning money from it. This company is. I just genuinely think they'll be taken out. That's not a reason to invest. You've got to invest in a company that's doing well and improving, and they are, I think. So it's taken a knock, but I think it's a best-in-class system they've got.
There are some very nice AI business on the UK. I mean, looking beyond healthcare. Windward is one that I like the look of.
Yeah. Is that where's that based though? It's based in Israel, isn't it?
But they do maritime domain awareness. There's a couple of companies doing that. I can't remember the name of the other one. Oh, God, what's it called? Marine whatever it's. I can't remember what it's called.
Marine Systems, yes.
SRT Marine Systems. That's it. Yeah. But Windward I like. It's growing rapidly. Maritime domain awareness. Yeah, it's going to be a massive thing this year. And this, the sea is a very big place, and AI makes it much easier to kind of manage that space. So Windward is another one I like in AI. And what we've seen, in the Red Sea that we spoke about the other day, that is a classic example of why, government agencies are really very keen to invest heavily in that kind of technology.
Yeah. Look, it's another one for news update. I mean, if you look at these, because they're bellwethers pretty much, the health of the industry. But this trading update and notes, it did drop by 10% today. But having said that, it's like, look at that. It's still up from the lows, and it's not going to. I can't see it revisiting those lows. I've said house builders probably traveled too fast now. They've, for now. Look at. I mean, the big one, one of the best is Taylor Wimpey, and it's rallied like crazy. It's like literally done 82% from the lows. So I think they've had a good run, but now is not the time to start putting your money in. Now I think they'll have a little dip probably, and then probably revisit then. But what is Gleeson saying today?
It's a miss at the top line, so 14% down in terms of home completions, which is not surprising given what's been going on in the housing market. The worry here, I guess, for me is the net debt, the swing to net debt.
Oh, okay, yeah.
So you've got essentially a 23 million swing there from a net cash position at the half year to a net debt position at the end. That's probably what spooked the market more than anything.
Yeah. Wow, I didn't. Yeah, I didn't look at that. So, because I look at net reservations during the half year were 0.41, which is up from 0.36. But yeah, the fact that so why is this? Land sale, additional costs relating to a number of older sites, along with the cumulative impact of current market conditions, including extended site duration, sales incentives, multi-sales. Okay, gross margins going down.
Investment, investment in bringing forward a higher proportion of home starts. So there's been a lot of investment. It's going to take a couple of years to unwind, as it says there. So yeah, that's not ideal.
No. Yeah. No, I think house builders have had a good run, pretty much. Let's look at what's on the front page here. Let's look at most read. You got Premier African Minerals. What are they saying? It's down 8.5%. So I've not read that, but drill holes. It's not my thing. Drill holes.
That one is not my thing.
Mobile streams raised some money. It was a slight premium, I think, because of the time gone by since they announced it originally. So here we are. C Machines unveils latest Guardian technology. What is chart C Machines doing? Because I know there's a lot of it's can't get above that 200 moving average. Look at it, struggling there. But tested anyway. Anything you've been looking at, John, news wise?
What have we got? Games Workshop.
Oh yeah, and
very good numbers.
Yeah, down slightly. I mean, they've come off a bit recently, haven't they? I mean, like I said, they're not cheap, but I mean, good companies aren't cheap generally.
No.
But yeah, look at that. Here's dip below that. What happened there? Why did it drop by 14% on the 7th of December?
I don't know. Let's have a look. What happened on the 7th of December? Half year trading update.
Oh, okay. That's why. All right.
So yeah, we knew that, the expectations of this company are very, very high. It's got a lot of very enthusiastic shareholders. So yeah, high expectations. Had a good run. Perhaps wasn't quite as bullish as its investor base had hoped. The thing that struck me here was the licensing revenue was actually slightly lower than last year. And licensing is where I think it's anticipated that there's going to be a lot of upside. So obviously confirmed this deal with Amazon for a Warhammer television show.
Yeah.
But obviously these things take time to develop. And so yeah, for the time being, licensing revenue is a bit lower than that. I suspect people would have hoped. That's where your sort of pure profit upside comes from.
Yeah. So all the metrics are up on this slightly, so it's good. But again, it's one of those companies a fantastic run. It's almost like you're pretty much, unless you bought the dip down here, you're pretty much a couple of years too late.
Yeah, the tricky thing there was at what point should you have bought the dip? It was
well, crossing to a moving average. There
was a good year where those shares were firmly out of favour. So
yeah. Well, look at that. Even going back to 2018, they were literally 10 quid, and now 10 bagged.
Well,
when you get a 10 bag, how far much further can it go? You get a little bit upside, but you want to catch it down here, didn't you? You want the 10 bagger. You want that's what you want.
Management change changed the business model there. Yeah. Really sort of powered that company. So yeah, that caught my eye. What else? I mean, let's say B&M's numbers were decent. Kooth kicked off its California contract. It's a huge contract.
Yeah.
I haven't looked at the share price lately.
It's down a bit. Again, it's one of those things that, again, how much is priced in here? Because I don't think it's as cheap. I mean, again, we keep saying go back to, it's a quality company. It's not going to be cheap for a long time. I made a big mistake here, but I limited my upside here, and I just got out because I thought they were going to raise money, and they did, but I didn't see it being raised as a premium. So it just shows how good a company they are. But now I think, well, it's I can't.
Yeah, it's a massive contract. This thing, it's offering sort of mental health support through technology to 13 to 25-year-olds in California. It's worth 188 million over the next 3.5 years.
Yeah,
huge.
Well, yeah. So it's 60 million a year each. But what's the market cap now? We are
120 million.
120, 110. Yeah,
near enough. 110. So yeah, nice company, Kooth. Really nice company.
Yeah, but even if you do the basic maths on that, 60 million a year, right, on revenue, what are you going to hope? Even if you do round figures, net profit of like 6 million, then you put that on what, a multiple of what? Still, well, it was okay. But I said because I remember seeing the reason I learned about Kooth when actually Paul interviewed what's a guy from Premier Mighton, Ricky not Ricky Gervais,
Ricky Gervais,
not Ricky Gervais, yeah. And I just looked into it. That's an interesting company, mental health. But it was up here, and I waited to come down. I did sort of buy it across this, and it did really well. And then I just got out from it because I thought fundraising was going to happen. And that's one lesson. Never limit your upside. And I missed this big jump again. I did okay, but I missed the big jump, which is annoying. But now I think the value proposition is as great as it was.
Looking forward, that the shares are expensive on a sort of headline PE basis, but I guess that the thing about this company is you would hope that with a platform like it's got, it can scale without increasing its costs at the same rate as it grows its revenues, and that valuation will come down quite markedly. I've only got forecasts going up to end of 2025, so it's beyond that where you would hope to see the valuation come down, the rating come down, and it's at that point that that's what you're buying. You're buying that future potential.
Yeah, but I don't know if you hear someone flagged up Agronomics. I looked at the chart, so I like that chart. I put an alert on this chart. Agronomics 11 pence. It alerted me that of 11 pence. I said, look at that. It's going to break. If it breaks 11 pence, it's interesting. And that was 11 pence here. Look at that. It's really done very well. 13.
Is any news? Any news?
I don't know, but someone is. Let's have a look at. And Nick, there's always news on stuff from the investments, but 137 million. New website. Here we are.
There you go. That would do it.
No, there's no news on it. It says 28th of November. That was, but it's doing well. That's what was that? Chris, good to see Anik moving towards NAV. Good to see investors realizing that it'll be the only play on the planet for reselling agriculture. It's the only play on the planet. Is it really? What about the companies they're invested in? I don't know.
Well, they're private, aren't they?
Informers is investing and just become degenerate and buy crap coins.
Hey, while we're on the subject of agriculture, another company that caught my eye today, Eden Research. It's got it's basically, again, it's a sort of agricultural chemical company. Basically environmentally friendly agricultural chemicals. It's done a deal out in it's got approval for a product, Mevalone, which is a sort of antifungal for the grape production industry. Very important in California.
Yeah, well, this is what it technically is. A foliar biofungicide developed initially to target botrytis on grapes. Didn't realize they had botrytis grapes. Oh, yeah. Napa Valley. What does it say about? I mean, does this say anything about the significant revenue opportunities for the company with the addressable market in the US of approximately 94 million for Malevolon and 189 million for Celebrus? Okay, well,
it's got quite a nice portfolio. I was having a quick look across its portfolio. Uses these things called plant terpenes to develop its products, which are sort of naturally occurring defense. Sort of treatments against these sort of these plant illnesses.
Plant healthcare do that as well, don't they? Plant healthcare is a similar area.
It's good. I like it as an area. Important. It's also got stuff in consumer products and animal health. And it's quite interesting. The animal health stuff I think is a little bit further away from commercialization, but one of the things it's looking at is sort of flea and tick control in pets, and this is funny enough, I gave my dog some flea treatment this week. It made her very, very sick.
Did it?
Very, very sick, the chemicals in it. Wow. So I think there are concerns around some of the existing treatments on the market. So I think there is an opportunity here for a company like Eden if it can produce effective treatments that are safer and more natural.
I'm looking at Plank Healthcare. They've been around a while. I've been aware of them longer, but they had a bit of a downgrade, didn't they? Trading update. It took a bit of a hammering, but they're really now 11 million market cap. What is the what do they do then?
Seed technology.
Yeah, but their revenue now is pretty much not far from one-time sales. Well, Eden's different. It's like 32 million. Eden's running So out of the two, it'd be interesting to compare those actually, because I know Eden, are they more early stage? Yeah, they're only sort of 1 million of half year revenue. Oh, okay. So there we are. It's too worth looking at there. There's nothing. Finny, don't see why the share price is rising.
No, as far as I'm concerned, there's nothing left of that company. It didn't get its banking license and it's game over. But
yeah, selling goods and just directed buying, but I think it's from a heavy oversold position. There's not as news really. DigitalBox here.
Yeah,
they come up with a bit of. They're saying they're seeing a bit more of a thawing in the advertising market because you've got to be careful. When you get companies like Future who rely on advertising market, all that stuff, they've got many income streams, and they take the massive hit. So when you get a company like DigitalBox, who's only got three, I think, is it three sort of assets pretty much, which is Entertainment Daily, the Daily, the Tab, or the Poke. No, five, and TV. They bought the TVguide.co.uk. 1, 2, 3, 4, 5, 6, maybe. But they did say that it'd be in line with market expectations, but I think that's been revised down previously. But they're saying that now that they're seeing it is thawing a little bit, the advertising market, but we'll see.
Yeah, it's a tiny little company.
Yeah,
it's hardly a bellwether for the industry.
No.
But in fact, it's harder for a smaller company to do well with online advertising. So the fact that it's forecast to be profitable marginally this year, and it seems to be a fairly sort of tight ship. It doesn't lose money basically. Which is a very sensible way to run a business like that. What else you got in the space? You've got Lad Bible Group, LBG. So they're perhaps a bit of read across there, and as you say, Future.
Yeah. Rich, comments here. Rich P. Greetings from 33 degrees in Thailand. The time zone is great here for pre-market opening and RNS reading at a reasonable hour with a beer in the hand.
Yeah. No beer for me.
It's bad luck to buy shoes as a present, Christopher says. Oh yeah, I didn't know that. Is that right? Well, who makes these things up? If you need a pair of shoes, you need a pair of shoes, and you
you can buy them yourself.
Yeah. Yeah, I suppose so. It's very subjective shoes, isn't it? In fact, very, very personal shoes, I suppose. Absolutely. So you can get them wrong quite easily. Super Mono, Kooth officially announcing California launch day. Pennsylvania site is also active, so probably will get announced with a trading update as due soon. Lots of jobs are going to India, etc., in the city, apparently. At Nirvana. So there we are. So. Actually happening.
Maybe so. We can see a lot of jobs just disappearing entirely if you can sort of automate the back office, especially with AI. So
yeah.
AI recruitment and AI are not happy bedfellows. You would think.
Yeah. It's going to transform the world, AI, completely, beyond anything. And you think which company's now got a handle on it? And Daphne's Clark, Justin, is your super duper valuation spreadsheet one of sharing? No, it's not. It's my
Do you mean it? You should share it with everyone.
I've spent 2 years investing time in that. You've got to pay for it. Dagger, never to be afraid. In fact, it's even have a super duper update soon. Never to be afraid at all to share. I've held companies for 5 years before they become positive and made decent profits. Yeah, maybe that's the. Yes. Yeah, you've got to be careful though. What kind of shares you hold? If you are holding, you've got to be careful. If you're in micro caps, they're digging dirt in Africa, right? They may go down for 10 years. But if you are in companies that are generating cash, eventually you'd think, even their net assets were above their market cap. So it's fine. So you've got to be careful of what you're holding. You can't really hold micro caps that have never generated anything. Because all they're doing is diluting and going back to shareholders, diluting shareholders for more money, essentially.
You can if you can see where the profits are going to come from and when, if you're fairly comfortable in that.
If they are going to come.
One thing I would say about if you can hold them for a long time and ultimately be proved right. But what you're missing in the meantime is the opportunity cost of putting that cash to better use elsewhere. So you could have basically invested in something that was rising, take cash, take your profits on that, and then buy. I mean, it's timing, it's hard, but there is a cost to holding something that's loss making for 5 years. You're losing returns on that cash from elsewhere that you could have made elsewhere.
Yeah, Elson, do you ever add alerts to indicators on trading? Yeah, all the time. The majority of my alerts are on 50-day moving averages and then 200-day. Largely. All ANIC companies are private. That's what Chris says. At least 6 will go commercial over the next 12 months, including dog food company, Meatly, 100% owned, Liberation Labs factory, the only precision fermentation factory. Phil is saying, let's hope for some lower lows in JD Sport share price. No.
I'll buy JD. I'll buy JD when those shit. I keep falling. I want those shares.
Yeah,
so, but I want to pay as little as possible for them. So keep falling.
Yeah, absolutely. I think, but yeah, again, what's return you open to get them? Because again, it's like JD Sports. We should have been buying this 5 years ago. It's literally, and now it's a big market cap, isn't it? It's what is it, 5 billion?
Yeah, but I mean, if you look at it, I mean, I don't know where its business is exactly, but it's big in the UK. It's got a bit in Europe. It's big in the US, where it made a large acquisition. There was another market to go after, which is Asia. So, this is the case for buying some of these big companies. And I spoke to Nick Train, who runs Finsbury Growth and Income, about Unilever on the same basis. And Unilever has a massive opportunity in sort of developing markets like India in particular, where you're getting a rising middle class, a growing middle class, and the consumer economy is nowhere near as developed as it is in the West. So there are opportunities for big companies to expand further globally. JD, I would say, is one of them.
If they're hammered, of course. I mean, but like I say, I want to find the JD Sports of tomorrow. I don't want to, because I want
JD Sports is the JD Sports of tomorrow. That's my point.
Well, is it? If you go to Asia, there's a lot of competition there with cheap brands, isn't it? I mean,
it's not the brands that matter. It's the footprint. It's the ability. It's the relationships with the large manufacturers. JD, by dint of its scale, can cut deals with the likes of Nike and whoever else in a way that other retailers just simply can't.
What's the PE in those, Sean? Look him up.
Tiny.
On JD, is it?
Yeah, 8. My guess is 8 forecast.
It's going down to £1, isn't it? Let's be honest. That's a support level. There's £1.
No, 10 forecast. There you go. So yeah, keep coming down. Keep coming down, and then
no, I don't mind.
I'll have a little bite on them.
I don't know. Someone just say Avacta heading towards £1 again. Look at those lines. I draw those lines many months ago. It literally goes up and down like that, and it's a sort of pound level. Seems to bounce off that, so you could say, it may have support there. Again, I'm very wary of trading. Well, in fact, I don't trade off support like that at all. But I prefer to do it in companies generating cash. That you can see the valuation is quite cheap. It's hard to value companies sort of political stage.
There you go.
Unless they're super cheap.
Just heading back to JD very, very briefly. Rest of the world, which is outside the UK, North America, Europe, accounts for just 5% of its revenues.
Well, but also you can look at that both ways, can't you? Why haven't they gone for the rest of the world then?
Because it started with the UK, then it bought big in America, and I think a lot of people were nervous when it did that because it's big acquisitions in the US have often proved very tricky for British companies to make a success of, and you take it one step at a time, and I think, as I say, the rest of the world is the big prize there for JD Sports as it sort of expands another front. I reckon there's scope for a big deal somewhere in Asia.
Yeah. Well, they better get on with it, don't they? Get on with it, JD. Justin will be too modest to mention about SBDS is flying. Yeah, I'm very modest.
Yes, he is.
No, but do you know what? It's very. The reason why I punched out tweets on this is literally this is a big year in third-party cookies. Google's officially announced on the 4th of January they're phasing out third-party cookies, and that's like I said, 60% of internet traffic is through Google Chrome, and so. They're going to. I think a trading update normally comes out around end of January for SBDS, so we need to see where they are. But this is helping, of course, advertisers target consumers without third-party tracking. By the end of this year, there'll be no third-party cookies from Google Chrome, which is just like I said, Safari's done it, Firefox has done it, and so you think, how else do you target advertisers? And the advertising market, digital advertising, is huge, 700 billion. It's going to be $1 trillion by 2030, and it's still growing. It's massive. But now they've got to change the way they target advertisers, and so they look at companies, and they are SPDS are working with the 3 biggest agencies in the world, so advertising agencies. So their product 4D AI is obviously very good, because all the big advertisers work with. So I think it's a huge
AI driven again. So
yeah,
there you go, another
so I think it's
AI
a huge market. Yeah, huge market there for them. Like I said, if you look at their previous tests against other, comparisons, contextual models, they've beaten them hands down pretty much. So it seems like the work they put into developing this, it's taken a lot of cash. That cash burn's come down on it now, but it's taken a lot of cash, a lot of time. It seems to be paying off a little bit. So we'll see from a trading update. Hopefully by the end of this sort of, what is it, a month, I suppose, January maybe. Or anything else happening out there? Any big cap news?
Yeah, the only other thing that struck me today of any real note, well, I mean, apart from over the US, but you had a couple of updates from the asset management industry, Jupiter Fund Management and Impact Asset Management. They're both still seeing net outflows.
Yeah.
Performance hasn't been so bad. Performance has rescued them. But unfortunately for Jupiter, one of their star managers is leaving. It just kind of shows you.
Yeah. Even set up his own boutique.
Set his own boutique. The shares are off really, really quite heavily there.
When you say boutique, do you, I mean share dealing, not a boutique as in selling frocks and stuff.
Equities boutique. I assume that means some kind of small fund management group, which is what it's well trodden path within this industry, and a real danger for the big. It's astonishing. The whole sector looks not dissimilar.
But but the thing is, honestly, when the market turns, you can literally, they've got good liquidity, they've got good cash. Some of these companies, you just put some money in those and just sit there for these 3 to 5 years.
This is the worry for this industry has always been that ETFs will just come and eat its lunch, and that if nothing else, ETFs have shown that the high charges that this industry has historically charged are unsustainable.
Yeah.
So, but again, when industries
heavily
out of favour.
Yeah, like I said,
we think they're worth a nibble at some point.
Yeah, exactly. That's it. I mean, when all these fears, tend to come out when in a bear market, and then you seem to find it will turn, money inflow will happen, and even down to things like Hargreaves Lansdown, all that, they will turn. It will turn, and
especially the asset managers. Something I've been meaning to look at in a bit more depth for some time.
Yeah.
But today, it's still sort of plodding along the bottom, and the numbers are pretty ugly, and there's that key man risk that we've seen in Jupiter there.
Yeah,
nasty.
Informer says, I know I sound like a troll. No, I understand the frustration. It's like I can cope with my investments going down, but I struggle when clearly fraud like crap coins make life-changing moves. I understand that. It is frustrating. I just see, some of this stuff there. I mean, worth watching, John. I don't know if you got Netflix or anything, but on Saturday nights I watched Bitcon, and it's very good. But these guys basically set up this is a debit card where you could pay in shops and it would transfer Bitcoin, and it's complete fraudulent. And the inward investment they had was phenomenal. They made about 30 million. I think they made, and the guy didn't get a day in jail. One guy did 8 years, but it was a clear con, and people just putting money into it, and until it gets, and there are plenty of coins out there right now people are investing in, thinking they are the future. But one day you wake up, it'll be no longer. And
there is a case for crypto. There are use cases. Bitcoin is becoming
blockchain,
more legitimized. That sort of that reputation for major fraud has been sort of addressed somewhat by the prosecution of some of the bigger players.
There's still many. I mean, there was a stat at the end of that show saying how many were fraudulent, these ICOs. It's just basically issuing these coins that didn't exist. Some of them, people just plowing money into them. It's phenomenal.
It's not an area for me. I think there's
enough risk anyway.
There's enough risk out there. Absolutely.
I know. Anyway, we talked about the retailers subdued Christmas, which is not good. This is quite good news, and I do think this is going to happen. Rishi Sunak is going to have a hiding in the general election. Let's be honest. He's going to try and do everything he can to save face, if anything, and not get absolutely hammered. So I think the last budget we have before the election, whatever this is, how many budgets are there? There's one in spring. There's another one. Where's the other one then? Is it another one before the election?
No, the autumn statement.
Okay.
That'll be after the election, you would have thought.
Well, to gain some traction, of course, they're going to have to lay some plans down here to gain some traction with the economy. And Jeremy Hunt has been in talks with city top leaders about maybe a UK ISA plan. This was, rumoured to be announced last budget or the mini budget, whatever it was. But this thing about if you invest in UK equities, because a lot of pressure now coming under, saying the UK markets are not performing, not functioning properly. There's been IPOs in the US, there's been companies going to the US and the UK. Literally, very few companies have IPO'd at all in the last 2 years. It's like awful. So they're going to do something to stimulate the markets. And I think this UK equity ISA could help a lot. But they're going to do something. It's ridiculous. It's nuts, isn't it? It's just, people just leaving the market. In fact, companies getting bought out because they're so cheap. But they've got to do something to stimulate that. So I think I wouldn't be surprised if they go hell for leather in this next budget just to get a couple of votes. I think it's so embarrassing. I think for Sunak.
The reality is most electors don't really care. They don't care about the stock market. It's not of any interest to them. They've got their money in a pension perhaps, but they don't really pay attention to it. What people care about in the UK is property, and that is where I suspect most of the efforts to stop the property market crashing will happen before the election.
Yeah, it's sort of linked though, isn't it?
Not really. Property or pension. There's columns in newspapers about it.
Yeah,
property or pension.
Asset prices rising is kind of you want to get asset rising prices and all that stuff. I mean, if you want stocks and shares and everything, because in fact, people make money in houses, also go into markets. It's like that. When you start making money, you invest in other things, don't you? When you start losing money, you stop investing everywhere. Anyway,
so there's a very long answer to this, which we haven't got time for.
Yeah,
it goes back a very long way.
Yeah. Marvelous stuff. Thank you, everyone. And just catch up. Any more comments there? Justin, not sharing that spreadsheet goes against your ethos of education and stock investors.
Absolutely.
Put it up as a download somewhere. I'm sure many will be happy to make a donation.
100%. Buy me a coffee. There you go.
Yeah.
I'll buy you a coffee.
Maybe I will one day. It's still a work in progress, but anyway. If I give it to you, you wouldn't honestly use it properly. It takes like 20 minutes to put the figures into it, and it's hard work. But you get dedicated to do it. There we are. There we are. Maybe I will. And who knows? For a donation of £99.
I just get SharePad to run it all for me without having to plug any numbers in.
Yeah, but mine's better than theirs.
Okay.
Yeah, because they don't look at momentum. That much as I did. They look at potential as well, and that's all plugged into it. Anyway, thank you everyone. Don't forget to hit that thumbs up button, share it, like, subscribe if you could, and download the. In fact, do you know what? The Vox Markets app. This is why we do this pretty much. It's to share something free that's invaluable. The Vox Markets app. Go there, voxmarkets.co.uk/app, and download that. That is, how much money is going into developing that? That's free. So there we are.
Yeah, it's good free products.
Marvelous. Thanks, John. Speak soon.
Thanks. See you later.